God. A lot harder than I thought it'd be. Hey guys, good morning. So I think today's kind of a boring day. I kind of gave up on like trading a couple hours ago once I saw nothing was coming up. I just been writing down quotes all day. Bonjour, salutation. Another quiet day it seems. Yeah. Yesterday I actually could have made some money. I went back through my stream and I went back through the stream and I saw the rough speculations I made. They were within like reasonable what do you call it? Like the way it laid out yesterday. Like it went up to 350. Went down to 240. It was within like the plan I had. But at the same time, yeah, I don't think I would have repeated it. So you gotta stay disciplined. But I did have some type of FOMO. Pretty upset. But it didn't happen within my time frame, so I know I would have took either a small win or a small loss. So not too much FOMO. Other than that, how you guys doing? I remember we looked at something yesterday, something like the second green day. I'm looking at Dontez's webinar right now because I actually just turned it on right before I came on the stream because I was so deep in like to looking at quotes that I just forgot everything to do. Like I was looking at K's chart. TREX. Okay. Cool. Yeah, so yesterday the plan for CREX, it had pre-market of like 10 million. Lost half its spike. It went up 1 to 4. And look at it. Like it just looks so much like more ideal. But it's still just like up about 150% and then lost half its gains. So I still think it wasn't worth in the morning for the short, and then it had enough volume and like a low enough float. So I think it was like 9 million. Now if you check, it's like 11 million. What was I say? That it had enough to like be worth a buy. But even if I did like do that little dip buy at like 240 or like within 10% I was talking about, it waited a whole hour and like 20 minutes until it actually broke like 280. And like I don't think my patience would have like went that far. Like if it did, I only would have kept that position if I went like less than the normal 1-to-1 for me. And so like if normally I go in 10K, the only long position I would have made on this would have been like a 5K max, risking something like super small just because it's not the normal edge. That's the only way I could have like went through this like carefully. But the one at 350, that was the one that was predictable. Like that was wasn't a double day intraday top, but it was definitely a double top. Lost its momentum. You knew those early shorts were gonna come back with revenge trading. Like there's so many reasons why. Like this was a good what do you call it? A good chance to short on the back end, especially like when it tested like for the third time. Pretty sure it did it like 5 times. I saw it on the second time, and I forgot what I had to do. I had to leave. Oh, I had music going. I was like, "What is that noise?" But I had to leave on the second test. So I definitely had at least 5 chances to trade yesterday, and then like come out like pretty decent. But it's always going to be a one tomorrow, just not today. Yeah, another quiet day. So I think I talked about like a second red day because CSPR. We looked at that yesterday, and it was no, it wasn't CSPR. It was MRAM. Yeah, MRAM. Yeah, this one was a multi-day runner that people were checking out. So we know second day runners are not trapped, but like they have a little less potential. But today's third day. I don't know if it went up, but you'll learn. Didn't think like yeah, just be all right. So this came from 6 and as high as like upper 12. I want to say before that. Okay, so I'm thinking like dollar blocks and float rotation, stuff like that. Cause like right now this is doing like a dip, but it's still overextended. Gotta see the year. I want to see what similar price action this has. Billion or is it market cap, right? If it is, that's actually gonna be a problem. Okay, yeah. Not right. So this is in the 100 market cap. That's within our expectation. And only 20 million float. Yeah. We're good. Is BIMI too close to the $1 mark to trade? Yeah, of course. So the thing is, with that kind of play, you can or how do I say this? You can definitely make money off of that. And you can treat it like a $2 to $5 stock. It's just the risk associated with if it's that 1%. Where'd my stuff? Sorry. Where is it? BMI? He said. BIMI. Like this is the one that was like $1.25 and up like 80%, if I remember right. So yeah, 60 cents to like 130. This is a very common how should I say it? It's not a pump and dump, but it's a very common like thing you see. Something coming from like sub $1, then coming up 100 something percent. And like a lot, there's a decent winning percentage in terms of like, you know, it gradually going back down to like 80, like, yeah, 80 at the most. You know, sometimes when people fully pull the rug, it goes down to like right where it came from. But it's also, there's a lot of risk associated with it. Cause like, you know, it's around $1. So legit every cent is like 1%. So it's similar to what we were talking about when I was talking about the one we didn't trade yesterday, which I don't even remember the ticket. Yeah, but what was it say? Oh, CREX. Yeah, with these floats or not floats, with these prices around $1, you can trade them, and you can actually trade them like with an edge. It's just, it depends on how comfortable you are. So you can do this with like, you know, max I'd go for 5,000. But you're gonna get eaten by the borrow fees if you don't have like enough of a win. So if you spend more than, was it 30% for your borrow fees, you have to make that 30% back first, or you're gonna start in the negative, and then that's gonna affect your trade. And then at any moment, there's always like a 5% chance, because this is around $1, that they can spike some, or they can bring in some type of news that brings this up to like $3. Like it's, how do I say it? Like there's just too many times where I've seen people go from like winning for months to they think they can go a normal size on this kind of stock, and then they just take a huge loss, and then that leads to like more losses. So there's a reason that Steven just stops trading stuff around like, you know, sub $3, sub $5, sub $1. It really just depends on the size of your account. But if you're trying to like do small and you're just going in this for the data point, and then the small money that can come out of this or lost in this, then you could go in there. You just have to be very you have to go in like pretty small, because either you lose money to the borrow fees and commissions and stuff like that. Hopefully this makes sense. But like when you get around $1, the stock or NASDAQ will delist you if you stay under $1 for way too long. And so the company is trying to use every single trick in the book to get it above $1. And then sometimes, you know, if we investigate it like a little further, if this is not like a reverse split or something, you'll get a hint at like how they've been doing it in the past. And that's why you have to go like to like 20 years sometimes just to get a hint at how they've been doing it before. Because like you see right here, this goes to like $1, 1 cent, and then it just jumps to like $10. You don't know when that's gonna be. I was like, even when it was down here for like it looks like from September to like October, you don't know what point in the month that's gonna be. You know, since that's in the past and people have that data, like, you know, that could be today, but you got a nap. That's what I'm saying. So like that's kind of looking at it in the pessimistic way, but like an optimistic way is you don't need a lot of money to make a decent amount. So if you're only trying to risk $1,000 on this, and you want to use it similar to like a gap up between like a, you know, $2 to $5 stock, you can do that. It's just, I'd say keep my wrist super tight, and if you see a like a halt or anything where there's enough time for like news to come in and like, you know, blow you up, or not blow you up, but like whatever position you have, then I'd go for it. The only way to really mess this up is when you over trade it. So like go in all at once, all in like what do you call it? TradeZero is the one with the free commissions, right? Or I don't know. There's an edge to this. It's just you have to have a very specific broker. You have to have a very specific edge, and like you also have to worry about like a lot more stuff you can't really control. And so it's just usually better to just avoid it. So we'll just go with that. I don't know why I'm cold, but let's see if there's anything that popped up. Oh yeah, I remember all the time. MR8 thing. So since this is a multi-day runner, in multi-day runners, we're looking for, I want to say top heaviness, but we're looking for like extension, enough people getting into like a specific dense area, and then gradually like coming to a point where there's enough money involved that it just falls, or news to like speed up the process. Come on, catch one of them. Yeah, pull up power. Yeah. Did you catch SYTA yesterday? PROG multi-day breakout? Question. SYTA, don't know what that is. And PROG, probably not. Yesterday just didn't trade. Yeah, yesterday was just my day to, get a good start on the weekend. Once there was an ideal trade in the morning, I just let things, go. Everything else was just, watching the chat room and laughing at some people, concerned about others. But let me check out these stickers you're talking about. Yeah, SYTA, PR. So this YTA or SYTA, it's it doesn't really meet wait, hold up. It could be the chart. Let me check something real quick. Yeah, this doesn't meet any like the patterns that I don't really go for. It'd be actually pretty hard to predict that this is gonna draw back like that. Unless it was like a bounce short, and then you were trying to. Okay, 147 million. Yeah, this looks a little bit better. But started at 3. Okay, yeah. So it would have been a bounce short. Yeah, if I had the SYTA like on my like watch list, or I saw that like, there was at least a 70% to 50% extension like from where it started, which it did do, and then there's a heavy enough resistance like with a wide enough range that it's reaching its halfway point, then I would have like went in. But yeah, I just, if I traded SYTA and then stayed mindful that this is a future bounce short, then I would have took an opportunity. But yeah, this is just new to me right now. At least I think it is. I think I traded this before, but I didn't come back to it. PR. Now this multi-day runner, been running for a while. Can't tell if these are individual days. Yeah, they are. So since there's like a lot of breaks in this, I don't think you can really use that. You can use it, but like it's not ideal the way I want to use it. like the price action. But it doesn't look like a lot of so how do I say this? If there's no like really big rejection candle, not rejection, like pullbacks like this, it doesn't have an edge that we're looking for. It's kind of what I want to say. But like if you look back in the history, it does do those big drops, and like it looks like it drops like pretty violently. That's just 20 here. Do it 5. Year where the volume's a lot more recent or like a reliable. It's like the biggest intraday like drop I can see, like recently at least. It gets to like 50 cents. Like it's, oh no, it's getting higher in price. So we should be expecting something, but still not something I'd rush into if Steven wasn't there, pretty much. And that mostly just comes from me not having enough data points on multi-day runner, but having the principle that I know I want to look for. So like, you know, if this already went up like 100, I feel like I can explain this better. Since this already went up like 150, 170% just within like 2 days, that's a run. It's definitely a run, but it's not enough of a run within a small enough amount of time that I think it would create the edge I'm looking for. Also, I haven't even looked at like the market cap and stuff yet, but just purely looking at the technical analysis. Yeah. What am I doing? For MRAM yesterday, was it bounced because it had huge volume consolidating last Friday around 10? Do you have any long-term investing? No, I don't have any long-term investing. Do I? Yeah, I do. But yesterday, MRAM yesterday, was it a bounce because it had huge volume consolidating last Friday around 10? So I think I already have it. I know I hit the start. Probably hit it in the background. Oh, same pair. So we said at 10 Friday. So, yeah. So like this definitely became a resistance. It's like it just tested like way too many times. And then like you see these little higher lows, and then it's definitely respecting this kind of line here. I feel like there's a better way to put this. Oh, I haven't on it yet. Wanted to put up the PROG since it was another multi-day runner. It is under there. It'll be fine. So, oh, why is it? So, I'm gonna pull up one of my multi-day runners from my notes, and I'll show you like the difference and like what I want to look for. Okay, we'll just look at the most recent one, which is like BI. yeah, just remember this platform right here, this one right here, that's trash. This one, this is great. But other than that, let me. So this one from 50 cents to $6, right? Or where's this out? This is the shorter one. Let me think of a different ticker. Yeah, but basically the general rule is you want like a 300% extension up to like 400%, and then like around that kind of range gain, there's just naturally gonna be a pullback, and then the more people, get attracted to the multiple days, they're going to trigger some kind of like wide pullback. In this case, the pullback was a full about $1.50 from a $5 stock, and so that's like 25%. And so out of considering the entire daily range gain versus like daily gain, daily range loss, 25%, that's a lot. But when you go like intraday, you're thinking, oh man, that's this looks like really scary. But that's why you kind of have to like come back out, because like with multi-day runner, the things on the daily, it's ideal to aim for those 25 to 30% areas, but you can actually aim for like up to 75%, 80%, sometimes even like 90. You just have to know the fundamentals of why things are getting like pulled back. And when I look at PROG and MRAM, I haven't did like the full analysis and stuff yet, like dollar block, slow rotations, like market cap, like minimum extension, tight ranges, places, reading the personal tickers like price action and etc. and stuff like that, checking the news and recent news and a little bit of everything. But basically these look like babies right now. Like this looks like it still has like 4 or 5 more days to extend, fake people out in between, squeeze them. This, like, pretty much what I'm trying to say is this would be something I'd look for once it gets to at least $6. With MRAM, this would be something I look for like once it's almost like 15. Yeah, so it's something around like 15. And then like the thing is, it won't even happen in like the next 2 days. It might be on like the 5th or 6th day. And it's not funny, but it's hard to explain. But like with the multi-day runner, another thing is you don't have to predict that day that it's like the big dip. You can also just come back in like on one of the days where something's already formed and treat it like a bounce short, or treat it like an overextended gap down, or like anything like that. Like this little bit right here, because who was it? Harry, he was talking about how the $10, how like that consolidated. You can use that area as like a support or a resistance. And so like if you see, what is it today, that like it just went all the way down here, you can kind of assume that like if enough people is consolidated at like this area, it's gonna have a certain amount of influence on like the next dip. And so I usually try to do like within 20% of whatever level is like condensed, and like I use that as like the consolidation zone, and you can use that upper zone as like a support. And like I try to buy off of that, and I'd go for something like reasonable based off of the recent price actions, like volume coming in. So if this is like a float around like 20 million or something, and then what's the current volume? MRM. Yeah, see, it's only at 1,000,000 volume right now. But if I see that the float is what would that be? Like at least 30% something. Okay, yeah, no, we're not even close then. So basically, you would have to count the bullish factors and the bearish factors. Where'd my yeah. So if what was I saying? If this is like a solid area to dip buy off of, I'd go for it. But I wouldn't expect it to go all the way to 15 in like the same day. Because that only happens with, you know, a certain amount of news or like very obvious reasons that everyone's gonna buy it. And like trust in like one specific risk, or what do you call that, resistance or support, isn't gonna bring in that amount of volume. But price action can. And price action, news, and a few other like catalysts. But oh no, it's a boring day. This topic seems like really weird. But there was something else. Oh yeah, multi-day runner. So like, there's a reason that you have to wait like a certain amount of days. I'll just show you. Cause like, I remember trying to figure this out like in the very beginning. Be another drawing. See, like there's a few of these notes where I just don't want to pull them up because they're mine. But the other ones I can at least give you the general framework. Well, I don't even know why they're not coming up. I didn't label. Oh. Anybody got any other questions? Definitely a better way. Oh. Within 10 days, no pullback. Oh, okay, there we go. I think I remember. Yeah, but I posted together. No plays today? Oh yeah, of course not. There's nothing. Not even like something to scalp. When it comes to like MRAM, like there is no edge on this right now. And then the only edge that could be found would be if this like, you know, reverses, makes another top of this area, then closes like kind of strong, and then dips in the morning, and dips enough that you can pretty much risk whatever this is. But if it doesn't dip enough, then it's gonna be, you know, a bad short. And if it's a bad short, then it might, you know, just squeeze people up to 15. And so like that's what I'm trying to say. Except it's hard to like give you what's important without like baiting. Like, or at least that's what it feels. Cause like right now this is just one green day, second green day. Then, you know, it's probably online in all the articles. Oh, short on the third green day. But there's like enough support and like too little volume here for it to go either way. Like it said only like 1 million is what it said. Yeah. And you know, it's an $18 million float. We don't know if like most of the float is like bought by people, or if like the people in this one candle here, where I can't even see the volume, it's so small. Still want it to be on the data. Yeah, still only 1 million. Yeah, it's no edge here. With this one, how could I flame it? Okay, so this has volume. but it doesn't have range. Yeah, so with this one, minimum 6, but like preferably it's something like 8, and then dance in between that 6-8 area long enough to create a very heavy area that like I'd want to like create a bounce short within that area, and once it cracks that support that's probably going to be created today, then I'll try to ride it all the way back down to 350. You know, everything can be done better with drawing. I just want to make sure I know what the hell I'm talking about first. So GGPI sounds pretty cool. Wait a second, I think I saw GGPIW like a couple days ago. I think it was like a warrant. Yeah, a couple days ago, the warrant for this was like huge. Yeah. Okay, 20 million. Negative someday. Up 15%. I said 15. 50% over like one day. Stayed at this area for a while. Oh, breaking new highs. Now okay, so wait, how long has this only been there for a year? Yeah. What kind of company is this? Okay, finance, Dell company.
What's up guys, Steven Ducks here. I did get a lot of requests from you guys that I should go over a statistics 101 for you guys. So if you have no...
Oh, I think I just uploaded like all of the ones from that box. Okay. Not on SSR. So 425. No, that's not a warrant. We need a 424B. Rule 14. I don't know. So it had a recent earnings. So is this why it went up Friday? Yeah, this is Friday. So it had a recent earning, went up 50%, and then news travels slow, so we can expect like 3 days for it to actually, fall off and stuff like that, depending on what kind of news it is. And since it's finance, not like pharmaceuticals or robotics and stuff like that, it's gonna have a different price. It's gonna fall off a lot slow. It's kind of a $1.2 billion cap. So just knowing that or keeping that in mind, I'd actually be more lean towards going long on these type of plays because the fundamentals are kind of strong, especially since it's like finance. But yeah, just before I even go any further, like this is not anything ideal for short right now. No extension. But I just want to show you like what kind of things I look at when I assess what's going to be useful, if that makes sense. Oh no, he already said. Saw this the other day. Six. If I remember right, in the past like 2 months, this ran up at some point. I think I even tried to trade it. I just don't remember what play it was. But I know it. Oh. Whatever. Yeah, it. Oh. Not important. Really? Oh, is this? Okay, so this is this is another reason why it's always good to look at previous charts, because you see it did something similar, like upper 4, upper 3 area. They ran in the pre-market to thick, did the same thing today. And I remember this is one of those plays that like 4 to 6, so like it's up 50%. And I don't remember if it was like a something worth as like a bounce short before, but I remember like wanting to do something with that, and it died right out of the open. Yeah, so around 6, right? So before, I was probably trying to combine this one and this one together, even though this one has slightly more volume and cancels this one out. I think I was trying to use these two as a means to, you know, short this. Okay, I also probably could have used this one, but yeah, other than that, we're just looking at, wait, RT. Oh, that was another one. Or was it RT? Oh, well, let me just look at. No, nobody's saying it. Let's do. Might just go through my old ticker. Well, I kind of did a little. So it's only up 20%. Still a $2 stock. But like this run, can't ignore that. Like what, $1 to $2, over 100%, and it's not the biggest move. Like when this candle opens right here, this looks like a very opened here, probably went all the way up, came all the way down, then recovered at the end of the day, right there. This is probably something really similar, closes like that. And with having like that in mind, that it goes up, go all the way down, comes back there, you know, the most consolidated point, you know, around like this upper, like, what do you call that? it's the same reason that people use that one BRO indicator. BR. Oh, I'll figure it. Oh, IBR. Yeah, IBR. So the people that use like IBR 20, they're basically saying that if it's above this point, which is like 20, this lower 20% above that point, it considered okay. If I don't have like the full words, then I'm not gonna share. But I can definitely see this turn into something. Wait, what? Okay, so it did do that. Cool. It's just this didn't have anything like very dense, so you would use this area from like here to here as like the zone that's worth calculating volume, 2 worth any kind of support or resistance. But yeah, there's no volume. Oh, crap. Nothing's. I just don't want to give like bad habits. Yep. Can we go home yet? Anybody got any questions? Rahul, Harry, Rome. There's something else. Oh, I know. I used to create tips. I have. So one of the practices I really like to do is once I like learn something, I like to try to boil it down to its like fundamentals, and I try to play with theories. And so anything that has like this tag theory on it, this is me trying to play with those fundamentals and like, you know, pretend to be the guy with the hedge fund, pretend to be the guy with the mentally, like all the biases, stuff like that. It helps you like try to understand stuff. I wonder what kind of crazy stuff I was saying. Oh, I have a question, but I'm making a coffee at the moment. Ha. Okay. How much of your account should be used per trade? I've seen 30 to 40%. So that's not a hard question. Let's put an account. So beginning account size 30K, 6K position, which is up to 20% of the entire. So I like to do 20% of the buying power or like margin. But you want to actually do like 20% of the cash. But eventually you want to do percentages of the buying power when you get to like the next level. That's what I want to say. So what am I doing? I think I showed you guys like one of the early stage calculators I made, just so I didn't have to think about a lot of stuff. So up here you have the equity. So like mine's like 35K. right now, and so that puts my margin at 70. My index down here, which basically means my max position for like a 1-to-1 trade, and like I wanted my max like 1-to-1 to be 20% of the entire margin, and so that puts me at 14k. And so like that's what I do because I consider myself a beginner. But when you get people like Steven, you know, they can go up to 60-70% before the risk outweighs the reward. And like what I mean by that is equity ratio right here. So when you put in leverage and you go over your like cash amount, the more money that you could potentially be underwater. Once this reaches like 20%, they're gonna cover your account and it's gonna be a blow up. And the broker does that to protect themselves. And once you get to like, you know, leverage times 2, you start at 50% equity ratio. And then if that point gets to 20%, which means you can lose up to 30% of that max position on the leverage times 2, then max you can risk up to 30%. But you never know if it's like exactly 30% or like a little bit above, because like it's up to the broker like to tell you what they're comfortable with. And there's also like, you know, the spread on the stock. Like it could legit be one candle makes it look like it went past that 20%. You just never know, so you don't want to even get close to it. But the people that have been trading for years, the reason they can do you know, more than 20%, more than 40%, like, you know, sometimes up to 70%, is because they know exactly what they can get away with because of their experience and their knowledge about how to balance those risks that are also, you know, it varies by broker. It's like, you know, TZ might wait till you get to 20% ratio, but like other brokers might wait till you get to 30%. Like what do you call it, Bitcoin, since you could do up to like 10 times leverage, like all this other stuff, depending on whether it's like cash or margin bought, you only can get to 50%. So yeah, hopefully that helps. I should probably put that back before I forget about it. Oh yeah, I was gonna give an example. Like, so if this was 70%, this means that I can use 50k on like my next position. And now using that 50k might look, you know, pretty good, but my risk changes now too, to where before it was like 15k, and so if I was risking like up to 15%, the original one would have been like, I'd like to have visuals, so like 10% of this 14k would be $1,000. And so if I'm risking like 15%, I'd be risking $2,000. Versus if I put in 70% of my margin, you know, it's a big difference from risking 2,000 to risking closer to like 7,000 on a trade when my equity is only 35,000. And so before, I could like spread this equity until the point that I only have how do I say this? I'm like 10k above PDT. So like this is how I see it. Like I'm 10k above PDT right now because PDT is at 25k, and so this means I have 10k of cushion or room to like try my best. And in that 10k, it's a lot easier to manage if I have, you know, 20% position. And so like this, if I do 2k losses max, that means I have 5 chances. Like, so I have 5 chances till I can like blow up, and like I have 5 chances to like, you know, exponentially grow once I know what I'm doing. But if I change this to, you know, like 70%, my risk it still has to be like a very like wide percentage, just so I can get the decent amount of technique and like, you know, give myself room to grow. But when I do this, instead of having 5 chances, now, since my risk is like, you know, it's still like 10%, minimum, if I'm risking like 5K and I'm still using the 10K like cushion from the equity before, like, you know, it just becomes like harder and like they take my margin away in general. Now I only have like pretty much one chance, or two chances actually, because like it's gonna be 5K each. And so, you know, in one side, you know, you can make more money, and so the reward gets like what, 3 times bigger, but the amount of chances you have that are going to give you a data point that you can add to your statistics later, that's going to add to your, you know, your winning percentage and your overall win rate and everything like that. That's going to do you better just having those extra chances, or extra lives, or get out of jail free card, whatever you want to call it, more than that quick gain that you're probably going to quickly pay back on your next oversized overtrade loss. I hope that makes sense. Let me fix this before I forget. What's I supposed to say? So like, this is where I keep like a lot of my rules, just so I kind of remember. Like, but usually I recommend like max 20%. And then, like, you know, after a couple years or a couple, like, whatever you feel comfortable with, then you get up to 40%. And then advanced, you know, they can do 60% because they know exactly what they can get away with. Because you know how it is, like, a master is a master, all mistakes. Let's see, where you do you have this template available somewhere? Of course I have it available. I have it available on my laptop. But you can also buy the services and stuff behind me, and like, all of this is out there, and it's been out there for years. It's just getting to the point where you can be able to frame it and organize it and talk about it like I'm doing. It's going to create, you're going to have to go through either a lot of mentors or a lot of pain. In my case, I was very stubborn for like now and like years, and so a lot of the stuff I had was just speculation, up to the point that I started just tracking everything. And then I had like a lot of noise and I had a lot of right stuff. I just didn't know which one was which. And then slowly over the last 6 months, that's what I just been feeding off, just making everything relevant. Because like, pretty much while I'm still learning, while I was still learning stuff back in like 2017, 18 and stuff in 2020, you know, everyone else is learning the statistics directly following Steven, but I'm over here trying to learn the fundamentals of why he even made those in the first place. But in between, I gotta get past like a lot of stuff. But what do you call it? It's all starting to make sense now. It just took me a lot longer. I've always been kind of slow. I don't know. I have to stop talking to myself. Do you have this template available somewhere? No. You pretty much have to watch the DVDs and the webinars, and then Steven gives it out clearer than me. Like, his English is better than mine sometimes. And yeah, pretty much it. Regarding bounce short, criteria of volume ratio 10-1. Is that resistance volume needs to be 10 times the estimated daily volume? It's mentioned in the Duxinator. Very good. So when it comes to the ratio, you estimate the volume like using the pre-market volume or the first hour or half hour in the morning volume, and that's going to give you the estimated volume. With that, you're going to test it against the volume ratio, which in most cases you want it to be 10-1, and you want to compare that to the resistance on a bounce short. And now, in the most ideal situation, you want it to be 10-1, but it doesn't have to be 10-1. That's just the ideal. So like, when you see that, that's when you can, you know, take the mortgage out on the house, and you're just like, all all right, sweetie, just trust me. And then, you know, I was about to say Kobe. You just like, you know, you take that risk. But that's just how do I say it? It's like those tickers with 400 million resistance, but then the float's like 2 million. You know that like it's not gonna get past that 4 million resistance because there's just too much resistance. If anything, with like such an overwhelming difference in like the estimate for the volume and then the compared to the relative like resistance, if there's too much of a difference, like 1 to 10, like hypothetically, it won't even reach that point where it touches the resistance because everyone recognizes it's too big. And like that's where the 1 to 10 kind of comes from. And I was about to say, like, and so in the Duxinator is the sequel of the first DVD. So the first DVD gives you 4 longs and 4 shorts, and then the psychology behind stuff. It's supposed to give you like that first principle fundamentals of why these patterns are there, and then very basic ways to look at data like in a realistic way, and then apply that to the stock market. And like, you know, you just take the concepts and take the like very wide structure that he gave you. It's a safety net pretty much. Like he tells you how, if you really want to go crazy with it, and he also tells you if you want to you know, do it safely. Me, I go closer to the crazy side. But what was I say? That's why he also gives you like very fixed percentages. Aim for this, aim for that, just so it's really hard to mess up. And so like in my best month, which was like, you know, October, that's all I did. I just, you know, threw away my ego and I'm just like, fine, I'll do it the safe way. And then I made, you know, 15K in a month. You know, that's pretty good when you're 50% down on your account. And so I dug myself out of the hole doing that. But at the same time, I also realized that's me trying to beat Steven. That's not me trying to be me. And so I'm trying to find that in between. Hopefully that. But all right, guys, it's 10:35. Time to go. You say any long bias traders? Yeah, Gritani, like what's his name? Yeah, there's a few people in the chat room, but yeah, we can talk about that tomorrow. In the meantime, I'll catch you guys later. I'm gonna go back to studying, looking at my quotes, and anthropology, and probably some other quantum physics stuff. But who knows? I'll catch you guys later. Peace.